In this video, guys, I'm going to ask the question, why does everyone hate day trading? Stay tuned. Hey traders, warm welcome to you. Alright, so I see this quite a lot and it was a great question. Why does everyone seem to hate day trading? Why is everyone so against day trading? They hate it, they think it's gambling, they think it's this, they think it's that. Let's kind of address that. So the reason I think day trading has such a bad rap is because most people try it, it doesn't work for them because of the nature of what we're trying to do. We're trying to make quick decisions to make quick money, and it's hard. So people who try it and dabble in it fail because almost every day trader I know who started with it has failed immediately. Nobody jumps straight into it and becomes a genius overnight. Maybe there's some anomaly out there somewhere out of the millions who've tried it, but no. You go in, you make a complete mess of it, and then you start to kind of work out where you're going on your pathway with it. So that's that crew. The other people are who just hear that, hey, you can make money, a few £1,000s in a few minutes, and they think, well, that doesn't sound right, that sounds suspicious. And yes, because the way that it's marketed very often is suspicious. You know, people say you don't get something for nothing. No, you don't. You can't make a few £1,000s in a few minutes without having at least a decent amount of risk on the table to make that money. Heck, you could make $1 million a day trading if you've got the capital and risk capital to put up front to accommodate that, because it can scale up almost indefinitely depending on what market you're trading. And so that looks very scammy and very dodgy to a lot of people, and they kind of say, well, it's, you know, it's not the best thing ever, is it? So there's two sides of things. And reality is, you know, when you think about why people hate day trading, is that it's a very, very difficult to do. It's very, very hard on the mind, if you like, because your discipline has got to be absolutely locked down. One's lack of discipline can be devastating. Yes, we've done loads of videos on this before where we can get out of it, we can sort ourselves out, we're never going to be robots, but that affects a lot of people. You know, when they're investing, they're making a decision, the only discipline they've got to do is to stick with the investment until fruition. That's it. Once they've made the decisions, they kind of don't have to, and even then they, you know, people say, oh, I come out too early, I took 10% and things rallied 50%, or, you know, they still have the same problems that traders have, but because they're trading on a much longer time frame, the effect of it is so much less significant than it is on a day trader's perspective. You're doing that kind of multiple thousands versus their one. If you imagine over a period of a few years, they've got one or two investments and you've got many thousands of trades, you can see how a negative impact, what an impact a negative expectancy would have on that, as opposed to, you know, some mistake for an investor who takes 10% over, you know, a year period instead of 20%. You know, it's not that bad. Over time it's going to work out, but not so good, but over that period of time it's not so bad. So there's the load and the decision-making process that's needed. And of course, a lot of people just don't like the idea of sitting there and having to make decisions quickly. For me, you know, that was the thing that attracted me to day trading. I like the instant feedback that I get. No, you're wrong. Bang. Yes, you're right. Yes, yes, yes. And you get rewarded for making the correct decision. And sometimes it's challenging when you get hit because you're making constantly the wrong decision. That comes into the discipline side of it and comes into, you know, the confidence and all that kind of stuff. But to me, that was the rewarding side of it. But for many people, they hate that. They hate the fact that, you know, especially people who, you know, let's say they've worked in a corporate job and they're earning, you know, 5-10 grand a month or whatever it may be. They come along and they've worked all month for that 5 grand, 10 grand, and then all of a sudden, you know, they lose, you know, 2 grand in a week trading. You know, to them that's very hard to take, and they say, well, and okay, there's an argument to say that's probably too much to be trading, especially at the beginning, but you get the point. That's very difficult for them to see the ups and downs of the equity curve. Whereas investing, they kind of think like, well, I'm investing £20,000, £50,000, 10,000, whatever it may be, and I'll leave it. And because it's such a smaller, it's not likely to be leveraged up, it's going to be more just there's my risk, then they let it ride. Whereas obviously with trading, we're really leveraging ourselves up both in time and in money, and so it gets such a bad reputation from a lot of people. It's seen as the kind of Wild West, and again, I kind of blame some of the companies out there for marketing it as such, as a free easy money thing, and it's like a cash machine, so it's seen as a bit of the grubby side of the industry. And so there's a few of us out there who are kind of plodding on and are doing our own thing and are, you know, chugging away, day trading, maybe not every single day, but have that as an edge. There are some guys out there who are trading proper, who are trading aggressively every day and are doing great out of it. And then there's people, who are coming in and out of the business. And of course, I think the flow of people coming out of the business spreads. If you think about it in the pub, someone says, oh, I tried Forex trading once, it's a complete scam, I got ripped off. Oh yeah, me too. And so it perpetuates the notion that everyone hates day trading, that it's a scam, it's kind of not one of these things. And of course, don't forget, there's a slight conflict of interest here in that all the people who make money from your trading, from your commissions, from your spreads, want you to day trade. And so from a logical perspective, if you don't know anything about the market or anything about trading, you're like, well, the broker wants me to trade so actively, then probably I don't want to trade actively. And there is something to be said for that. As day traders, we've got to be careful. We're not over trading. So we're finding a sweet spot that will make us money on an intraday basis for our strategy, but not over trading to feed the broker, because the broker is going to make an awful lot of money from us, and there can be that fine line. And so a kind of person looks at both the things and goes, well, longer term trading is much better because I'm not kind of feeding my broker, paying my broker's Aston Martin payment bill. So that's the kind of way people are looking at it. And you know what it's like, guys, when you go and say to someone you're a trader and a day trader, some people look at you and go, oh, it's really super interesting, tell me more. Other people look at you and go, oh, you were responsible for the catastrophe of the credit crunch. You're like, well, not really, it's probably nothing to do with me, but thanks for the chat anyway. You know the score, guys. Anyway, give it a thumbs up if you're a day trader and you like to day trade, and I'll see you next one. Take care. Bye bye.